Julian, prices are higher by more than 2% today, but just on a weekly basis, oil is lower. How much of the daily moves are sustainable when it comes to some of the geopolitical tension?
I think the moves upwards are only sustainable if the tensions remain high and if those tensions continue to rise. I mean, I think that what we're seeing is a market that is perhaps fundamentally weakening to some degree, being propped up on the physical side by OPEC plus output cuts and on the geopolitical side by the rising tensions in the Middle East.
In terms of the tightness of the market, I'm curious to get your take. We're looking at Cushing, we're looking at global inventories, the lowest in a couple of years. So that is a tightening market, which OPEC Plus will welcome, because we just simply don't know where this war goes to.
No, we don't.
We don't. So does that tightening, that physical tightening, that draw, does that create a floor for OPEC Plus? The market's doing for OPEC what the journey that they set out.
Well, I think, yeah, and I think a lot of this is due to what OPEC, or let's, cut to the chase, Saudi Arabia has done in cutting 2 million barrels of supply and extending those cuts to the end of the year, and potentially, they could extend them further still. That's taken a lot of oil out of the market,
yep,
which has tighten that balance. But within that, we are seeing refinery margins weakening. So this is the earnings of refiners who are turning the crude oil into the fuels that we need. We're seeing shipping costs rising, so that's making it more expensive to deliver crude, for example, from the US elsewhere. That's putting pressure on physical markets, and that is undermining some of the strength that OPEC is trying to create.